How's it going, everybody? JT here on behalf of the EV Mavericks DAO and the R Ethereum daily general discussion on Reddit. So glad you guys could join us. It has been a minute since we've done a podcast. We actually had quite a few things happen over the short course of a few weeks, but we're back. And on that topic, because Fridays sometimes get incredibly busy for guests, especially during the holiday season, and my own personal schedule, along with the people that help run this podcast, I've been throwing around the idea of at least just trying to get one podcast per week, even if it doesn't land on Fridays. I would love to hear what your thoughts are if you're on X or if you're on YouTube or Twitch and you guys want to drop a comment. Let me know what you think about that. Because the way I kind of feel things going, a lot of people, it's just hard to join live in the middle of the day on a Friday. Everybody's kind of doing their thing at work, obviously. And sometimes Friday afternoons, people are kicking off early with some drinks or whatever over on the European time zones. And so I'm kind of tossing around the idea of at least trying to get one episode a week minimum and do it probably in the evenings during the weekdays. Evenings, my time, which is Central Standard Time. I'm out of the Kansas City area. Again, love to get some feedback from you, especially those of you that do try to join live. Is this going to be a critical thing for you? We do have numbers that are up and to the right on our streaming platform. So if you go to dailydoots.com, if you enjoy the podcast, make sure you subscribe and share it with some friends or whatnot. Nearly 100% of all of our content is contained within the Reddit community. Our Ethereum is our home base, daily general discussion, and we do try to find guests that are aligned in the Ethereum ecosystem, but I also like to talk to macro people as well, people in the broader financial realms that have insights into market movements and market makers. So with that being said, I had a guest lined up for today, but last minute had some family stuff. A family emergency actually came up, and so we're going to reschedule. I was really excited for this guest too, so we will get him on. His name is James Craig. He's from the Code is Law film. If you haven't had a chance to look up this documentary, it's really good. I supported it by purchasing it. Boy, I can't documentary. Okay, I'm going to actually show you the screen here. Code is Law. Here it is. Gripping and timely documentary that dives into all the different hacks that have taken place, some of the most famous ones that are out there. So, yeah, James Craig is the director. That's who we were going to have today. And we're going to reschedule some time with him. So, yeah, if you got an IMDb account, I don't think I do, but if you're into rating stuff, it's really cool what they did with this. And as somebody who's been a victim of a hack myself, actually twice, I kind of am really excited to talk to James and get some insight into his world and how that all came about. So, yeah, the documentary subtitle here, the teen math genius who pulled off a $64 million crypto heist amid a wave of massive DeFi hacks and then challenges what constitutes crime before disappearing as a fugitive. So there are people that are like, if you're extracting if code is law, right? You're just doing the smart contract things and, too bad, so sad. I don't know how I feel about that. So there you go. Like if the money truck is going down the street and the door happens to be unlocked and money's falling out the back, do you get to keep it? It's an ethical question. So, I mean, get a chance to watch this. It was really fantastically done. And again, I purchased it outright. You could buy it on Prime Video. You can rent it, but you can also pay, I think it's like $20 to own it. And I support documentaries like this. Any of this true crime stuff that deals with crypto, it's gripping. And it's I don't have the numbers in front of me, but I think that the amount of money extracted out of crypto hacks just last year alone, somebody could use the AI and let me know in the comments, but it's like billions and billions of dollars more hacked out of crypto scams and schemes and hackers than like traditional finance system type stuff. I mean, of course, it's kind of a gray area. I mean, some would say that some legal entities are committing crimes by printing money the way they do, but, I won't get into all that. So anyway, I got some questions for James, and we'll get him on next week. If you want to follow along, we're going to jump right into the weekly Doots and name off all of our people that are on the rich list and go on from there. So here we go. The weekly Doots live stream. Wait, I got a music for this now. Yeah, here we go. The weekly Doots live stream is all about showcasing the best of the week from the daily general discussion on our Ethereum. This is a read-along reaction series. If you want to follow along, head to dailydoots.com, designed and produced by our very own Hani Abu. Big thanks to Tricky Troll for capturing and curating each day's Doots. And thank you to the A Word for curating this most beloved weekly list. And of course, subscribe to us on all your favorite platforms. All right, let's jump right into our leaderboard for this week. Aiden Cairo at 118, Ethical Trade at 119, Crypto Wild Currency at 133, Hani Abu at 134, JS Tears at 137, Tricky Troll at 166, Benito 2030 at 178, Super Fizz is at 238, Logri the Bard climbing up 247, and Harog has eclipsed the 300 mark, sitting at the top at 301. This is the first time anybody's eclipsed 300 Doots on that leaderboard. So hats off to Harog for really setting a huge standard there. And really, anybody that's on this list, it's over 100. I mean, we got quite a few people that are so far. It's awesome. 1,273 Dooters updated weekly. I think PA7X1 actually crossed the 100 mark. Let me go to the leaderboard. I want to see just how many people have over 100 Doots. Yeah, so PA7X1 is at 104, Set One Less at 109, 696 at 112, the A Word at 112. Yeah, so there you go. And the number of people that have 10 or more, fantastic numbers there, like 200 people or more. That's fantastic. Don't forget also that you can mint your POAP if you are on this list. All right, you can look up your Reddit username and you can earn a POAP. If all you got to do is be on this list one time. How do you get on the list? You get on the list by going to our Ethereum subreddit and jumping into our daily general discussion and adding your own comments here. And if it gets enough upvotes and if Tricky Troll subjectively puts you on the list, well, you're going to get the ability to mint a POAP. And there's some other ideas we're tossing around with POAPs too. So this show just continues on, and it's really cool, man. 1,273 people, each one of them handpicked by a real human, graded by a real human, nominated or awarded a point by me. And there you go. Pretty cool. All right. Very good. Very good. Well, let's get on with our weekly roundup here. Whoop, I hit the wrong button here. Let me go back. All right, here's your weekly roundup. I have not read any of these ahead of time. This is for December 12th. We got episode 133. I can't believe how many we've had. Morning roundup. Here we go. Frank the Tank chimes in, Ethereum. And Johnny Dap gives us a price of $3,262. I think that has been comfortably wiped away. At the time of this recording, I'm at $3,074. Just like that, $200 knocked off the price. Womp womp. I think I got a sad trombone here. Let me see if I got a sad trombone. No.
How dare you?
I got that one. I like that one. The price has dropped so much.
How dare you?
There's sad trombone. I had to do it. Weekly haiku courtesy of JS Tears. Midtown to suburbs, one town with bridges and birds. Blockchain full of verbs. How does he do it? JS Tears, how do you do a haiku every single day? All right, our ship post of the week, because we always like to save the best for first user. Trillions dollar tech writes, Paul Brody is trolling. Oh, I saw this tweet. It's so good. Hey, L2 Beat, now that Solana is accessible via Base with their new bridge, can you start tracking them in your layer 3 metrics? God, that's so freaking savage. I think that's exactly how I quote tweeted that one. Yeah, so good. Oh, man, it's so good. Yeah, give Paul Brody a follow if you haven't on X. He is the Ernst & Young Global Blockchain leader. Funny dude, too. Super nice. Really good person. I actually tried to reach out to him to see if he wanted to squeeze in on this episode, but he is busy, as always. User Edmund Edgar, fellow moderator, simplifies what Fusaka really means for most of us. Edmund Edgar writes, the most important thing is data availability sampling. This allows you to publish data and only have the fact that you published it verified by a subset of validators, not all of them. This matters a lot for scaling because it means the total capacity of the chain will no longer be bottlenecked by how much data you can download on a single home internet line. It won't have much of an immediate effect because the thing is that its scaling blobs weren't at capacity right before the fork, but for the long term, it's a really big deal. It starts as a fairly small capacity increase, but then we can start dialing some knobs to grow the capacity really massive. The thing, the most immediately relevant to regular users is the SECP 256R1 precompile. Most signatures in the cryptocurrency world use the 256K1, which is what was used in Bitcoin. And that's what's mostly used in Ethereum. But browsers and smartphones and other things that don't have ancestry in Bitcoin typically use 256R1. This will help with stuff like controlling wallets with passkeys and a lot of other things that need integration with things that normie non-crypto people use. Great job, Edmund. Thank you so much. Fellow moderator, Edmund Edgar. User Haunted Jockstrap 88 sees parallels to beavers as currency. Okay, there's a lot to unpack in that line right there. Haunted Jockstrap 88 is his name on Reddit. And then the parallels to using beavers as currency, I'm assuming hides. I read about how during American westward expansion, I was correct, in the early colonial days, beaver pelts acted as hard currency on the American frontier. Fur trappers would trade amongst themselves and the Native Americans in made beavers, which was the unit of account for bartering on the frontier. You could therefore price other pelts, like otters, in made beavers. One otter equals X amount of made beavers. Survival supplies and food in made beavers, etc. So think of the word made beavers as a unit of account. The beaver pelts, while in large quantity, were of course not limitless, and the fur trade was disastrous to the supply of the critters, unfortunately. But still, the beaver supply is effectively self-replicating, but capped and predictable in how they replicated and how much they could. Ah, interesting. The pelts themselves were prized as the commodity of the day. Europe had already hunted their native beaver populations to the brink, so the discovery of boundless quantities of beaver on the American frontier created a beaver boom back in Europe, where suddenly the demand for beaver fur increased dramatically. So anyway, it got me thinking. Of course, digital made beavers, anyone? Well, I partially kid, but I do like the parallels. Hold on, I gotta find something real quick. I don't have it. Do I not? I don't have it. I'm thinking of the Little House on the Prairie theme while I'm reading this. So anyway, it got me thinking. Digital made beavers? Well, I partially kid, but I like the parallels. The beautiful part of this to me is somewhat a harrowing piece of human history, sorry critters, is the idea that these pelts were able to facilitate trade between different cultures. Throughout human history, we have used gold to do the same, but in certain places, in certain times, and of course where it was convenient and obvious to do so, we have substituted out that gold as the unit of account for other things. I think one of the major ideas of crypto, at least the store of value assets like ETH and BTC, is to find a way to replicate the same idea without the obvious downsides, to design a commodity that can be the unit of account in the digital age. Beaver pelts as hard currency doesn't work over the long term. When the demand outstrips the supply, the beaver pelts become more lucrative, but there's no mechanism to stop people from hunting them to near extinction to satisfy that demand and economic incentive. Furthermore, on the other side, while pelts are useful for keeping warm, a large part of the demand for them stemmed from far more squishy and unpredictable needs. fashion. Of course, we cannot have a unit of account based around something that may just change with the seasons. Anyway, cheers. Apologies if anyone has already gone that made Beaver's comparison. It's just something I saw that made me think of Ethereum. I could also just be terminally ETH-brained. Very good. Well, I like it. It's a good analogy, I think. It's some parallels, maybe not the best analogy, but it is. There are some parallels there. You do have a supply, right? And it is a commodity that can be traded by people with different cultures. Interesting. Great. Oh, yeah. I forgot to mention that going back to Edmund Edgar, he's a Duder 41 on our list for this week. Haunted Jockstrap. Excuse me. Haunted Jockstrap is a Duder number 23 for this week. Moving on, Rhythm of ETH is a Duder number 89 for this week. Rhythm of ETH covers the big beef between Solana and Base. Well, one day closer to Solana becoming the meme coin layer 3 of Base and Ethereum, X is filled of Solana figures mad that Base is vampire attacking them and did not reach out first to talk with the Solana Foundation. Max Resnick is having a meltdown. Jesse politely and nicely responds while stabbing frantically. What a day. Here's some context. Base has built a two-way bridge to Solana. It went live 2 days ago. Solana tweets grow the pie 2 days ago, but today Tolly and other leaders of Solana are especially mad, and the tweet has been deleted. You cannot see the numbers, but it looks like liquidity is moving net to Base, and Solana expected something else to happen. Base has also a lot of leeway to offer massively better experience with all the blob space that they will effectively get. Ethereum mainnet is like an arms dealer right now, selling ammunition to Base and killing alt L1s for sport. I have long said, this is just my personal opinion, I have long said that given enough time, the glacier of Ethereum will eventually soak up or move everything. It's just a glacier. It's slower. It's in terms of like development, but it's more broad in its reach. There's more. It's like, cool, you want this thing? It can be built on Ethereum. You want that thing? It can be built on Ethereum. It's just a slow moving glacier. And all these other ones are just like kind of flashes, and then they're gone. And then they flash again, and then they're gone. Now, it's not to say there hasn't been a hell of a lot of capital that has moved around. You know, people are opportunistic and they're going to look for the gamble play. And some people are truly convinced there's nothing shady or wrong with Solana, and it's so fast, why wouldn't the world just use something faster? But given enough time and enough logic, and you look at how that chain is supported and the centralized aspects of it and the power requirements and the data requirements to run your own node, it becomes pretty evident that it's kind of a shit show. So I'm here for it. They've been so demonstrably disingenuous on X and beyond. I don't really have a lot of sympathy for them. Sorry, Solana lovers, but that's just me. Man, my throat got dry all of a sudden. There's a pretty bad flu rolling around the area, and I hope I'm not getting it. I got 2 gigs to DJ this week, and I ain't got time to be sick. All right, user Nick Badlands observes a Solana versus base beef. Here we go to another one and gets back to basics. Nick Badlands for this week is a Duder number 18. It's great seeing the Solana vampire attack stuff in the comments and on Twitter, etc. For those asking what's going on, same thing as every other so-called ETH killer. They either bend the knee and become scaling for Ethereum, or they become a ghost chain. This time, it seems people are moaning about the meme coins moving from Solana to Base. Now, personally, I don't give a shit about other meme coins. They can go live on whatever chain they want, and are an unfortunate part of an open source crypto software for degens to waste their money on. The positive thing about open source is that people get to try out Ethereum's core code and they can tweak it however they want. This is great for ETH as they get to prove if changes work or fail. We're getting to see what happens when anyone can launch their own token. And well, if you thought these meme coins are actually worth anything long-term, well, I'm sorry, I don't think you understand what this technology is really about. Solana has actually tested out more about the whole open source Ethereum experiment than any other chain I've seen. Credit where credit is due. They have proven that low-cost implementation of tokens and fast block times, when it works, are something the market values. This is cool for Ethereum as well. Scaling and reducing costs has been in Ethereum's long-term plan for a while. I've been into crypto for over a decade now. There are very few actual new things that have launched in this time. Pretty much everything has been a copy of about 3 new ideas that people have tweaked to their own parameters. These are my 3. Bitcoin first proved that a decentralized currency was a thing that could exist running on a blockchain. We've come from this being something on obscure internet forums to the point where all the major financial institutions are adopting. Amazing. Ethereum first proved that you could build on what Bitcoin had established and run code on a decentralized blockchain, as well as being a currency. It could be something that powers applications. And finally, Chainlink, i.e. oracles. And another layer that can operate above both Ethereum and Bitcoin and any other chain. Ethereum proved that running applications was a powerful capability, but hooking that up to real-world data and data from other blockchains kicks that up another level. Everything else has been a copy of one of the above, but just with tweaked parameters. I'm pretty sure that all of the above are going to be the market leaders for some time. There have been and will be many copies of the above that will garner attention and yet fade into the background. Has anything truly new surfaced yet? And anyone disagree with my 3 new things? Oh boy, I got to do further exploration on this. Let's open this up on the Reddit and see who replied and what they said. Substantial Hurry 25 said, I would add Uniswap, Monero, Aave, Maker, Arb, Base, OP, and more recently Ondo as innovators. They have launched actually new things that I give credit for, perhaps second order to BTC, ETH, and Link. Iterad Astra, long timer, Duder number 75. It's wild. This is a reply to the ideas of Bitcoin, Ethereum, and Chainlink. Iterad Astra says it's wild that this was exactly the point of that BTC, ETH, and Link image that was making the rounds on 4chan almost a decade ago. I still see it around sometimes. I agree. Everything else is just improvements. Okay, Trillions Dollar Tech Duder number 30. 2 revolutions that ZKP will bring this year. Number 1, a new concept of L2 apps, lighter and thousands of transactions per second, so zero knowledge proofs. And 2, an L2 system that can directly interact with the L1 within 5 minutes and whose instances all interact instantly. That is ZK Sync Prividiums. All right. Rhythm of ETH replied to that. Privacy composability with layer 1 Aztec. Okay. Excellent. Good, thoughtful stuff. If you guys are looking for a good place to have a conversation, look no further than our Ethereum daily general discussion. Get the boys back on Reddit and lady, and because the long form conversation started there and it still continues there. We hope to see you around. All right. User Harog, here we go, weighs in on the big bug, which is critical warning about the importance of client diversity. And user Rhythm of ETH tells us the important thing all home stakers should know. Harog, top of the leaderboard for our subreddit. Here's a preface. I forgot to mention a very crucial part I wanted to write. 2 commentators fixed this. Please also read the comments to make sure you understand the current situation as well. This is connected to another post here about 25% of the validators dropping off and the explanation of it. I wanted to focus on the incident itself and what it means for Ethereum from my point of view, at least. 2 days ago, Prism, an Ethereum consensus client, had a bug and stopped advancing the chain. This means all validators using Prism client could not do their duties anymore. Luckily, Prism is not a supermajority client, so we only lost about 23% of validators. That's a large portion, but it did not influence the Ethereum in any significant way. There were more missed blocks than usual, so some transactions took longer to include, but throughput and security was unchanged. It was such a nothing burger that even many people in this sub do not know about the incident. If a larger portion of the network would have run on Prism, things could have gotten worse pretty fast. Over 33% drop off the chain would stop finalizing, which reduces the security to the level of what Bitcoin offers, meaning there are no final blocks. Things could just be reordered pretty far back without any repercussions. This also would not be a big deal. We had such an incident once before for a few minutes. People using the chain did not even really notice. If more than 66% of the validators would have dropped off the chain, would have stopped working by any meaningful measure. No more chugging along nicely. Ethereum would most probably have lost its perfect uptime because of a bug in a single client. Uh-oh. If this bug would have happened about 3 years ago, Ethereum would probably have been offline. Prism had over 66% market share back then, I remember. Perfect uptime would have been lost. We were very lucky that such a bug did not happen back then. That bug was a nothing burger today. Is only thanks to the very hard work of many Ethereum communities members, who most notably, in my view, are Super Fizz, for pushing for client diversity, and user Hani Abu for visualizing it with clientdiversity.org. Obviously, I forget many other people helping from the eStaker crew to push for more client diversity. It was a time of heated debate amongst validators, but it was totally worth it. Yeah, no doubt. No doubt. If any other chain has a bug in their client, it will be offline, as there is most of the time only one or two clients. Things like this is what makes Ethereum unique. User Rhythm of ETH replies to the quote, if a larger portion of the network would have run on Prism, things could have gotten a lot worse pretty fast. Rhythm of ETH is now on this weekly podcast for a second time, maybe 3. Okay, or if the bug happened on a super majority client. Reminder to everyone reading this that Lighthouse has almost 50% share right now. It would not fully impair Ethereum, but we should strive to migrate those to minority clients until no client has more than a 33% share. That would be a considerable bump in security. Having very spread out client shares allows for a tiny bit more of aggressive pushing of development deadlines. Client diversity makes Ethereum more competitive and accelerates its roadmap. Very well written. Good job. User, someday it is dark, starts a discussion about tracking and fingerprinting validator software. All right. Someday it's dark is a Deuter number 30 for this week. The ability to spoof the identity of what web browser you use or what operating system or your MAC address, etc., has long been a minor issue for technology. It's a minor issue because most people aren't even aware of it, and few mess with it. There were some small waves made when people found out that websites would apply price discrimination depending on your machine fingerprint, but it's still not a well-known thing. When the specs for Ethereum clients were written, there were no provisions for clients identifying themselves, except optionally in a block proposal graffiti. After all, they are all supposed to behave the same way. And even if they did have a field for reporting client IDs, they could be spoofed. Fingerprinting validator clients is not an exact science. The best way we know who is running what is when clients have a bug like Prism did. That's not ideal, though. Unlike web browsers or operating systems, Ethereum clients are uniquely positioned with the tools to cryptographically prove what client they are running in a way that can't be spoofed. I used to think that it wasn't worth the code complexity, but nowadays, I think I have changed teams. It might be worth an EIP. I've been focused too much on preventing spoofing, and I'm not really sure spoofing is an actual problem. And it's a effing tough one to prevent. I don't know of any good reasons anyone involved with proof of stake would be spoofing anyway. It's counterintuitive to staking. I'd love to be able to prevent it because I hate relying on trust, but honestly, I would be happy with a formalized way for clients to self-identity, even if it isn't totally spoof-proof. This thread does a nice job discussing the limitations of client fingerprinting and some paths forward. I think it is pretty wild that operators large and small make client choices using this data. And this is an ETH research by Joram 321, the title of it, allowing validators to provide client information privately, a project by Neithermind Research and Neithermind Core. I feel like those teams provide a lot of information to the broader ecosystem. So hats off to you guys. Hey, A-Word's in the audience. Good to see you. If you're watching this on X and you want to join the EV Mavericks Discord, you can head to dailydoots.com. Join the Discord. There's no token gating whatsoever. Just get verified with the typical CAPTCHA stuff and you're in. And you can join the public stage channel. If you raise your hand, I'll bring you up on stage and talk about anything related to what we're talking about. Love to hear you on stage. All right, there you go. Nice job. Someday it's dark. User, let's see, moving down the list, ETH2353 keeps us in the loop for Ethereum's upcoming upgrades from BPO forks to Glamsterdam. I just like that word, Glamsterdam. ETH2353 is a Deuter number 61 for the week. All right, the Fusaka network upgrade has shipped last week on mainnet with only very minor issues. A great success considering the issues we faced around previous network upgrades, Petra. No issues on mainnet, but on both big testnets ahead of the mainnet launch. The BPO1, a blob parameter only fork, goes live tomorrow, increasing the targeted number of blobs from 6 to 10. A 66% increase. Further ahead of us lies the next network upgrade, Glamsterdam, which is GLOASS and Amsterdam. I hope I said GLOASS right. I mean, that's how I want to say it because my third grade brain likes hearing it that way. GLOASS and Amsterdam combined gives you Glamsterdam. With EPBS, EIP 7732 as the CL headliner and EIP 7928 as the EL headliner. A lot of work has already been done on this and even more remains. A bit of contention has come up lately around EPBS, specifically around the trustless payments part of it. Some well-known players in the builder ecosystem believe this part significantly hampers efficiency and will not be used much in practice. While this feedback is coming late in the process, at least it's coming and should be taken into consideration. EPBS is a huge change, and it's hard for anyone to fully understand its implications. I'm not sure where I personally stand on this yet. I just watched the recording yesterday and need to review the pros and cons in more detail. For now, my impression is that there's a bit of disconnect between researchers and the real world, and this EIP needs even more refinement. For those interested in the topic, I'd recommend watching this recording for Friday's breakout call. The next breakout call will happen on December 19th. All right. They even put a timestamp in there if you want to check it out, dailydoots.com. Yep. There you go.
Barath, would you like to share your screen?
Yeah, I'll just share my screen. So let me know if you guys can see.
All right, so there it is. Very good. Thank you, E2353. User insurance guy question talks bigger picture and the motivation behind their ETH thesis. Insurance guy question is Deuter number 31 for the week. We all make decisions with investing for the ultimate goal of early freedom. Looking back, you always wonder if you made the right choice or are actually going to make it. All of it can feel like a gamble during the process until it happens. I go back and read the thesis for ETH. Seeing it being played out in real time reminds me how much progress has been made and how close we might be to having that eureka moment of being right. It's really all about conviction and seeing through that decision. Even though my freedom number is far, far away, I truly believe ETH is the best shot to early freedom.
I love it when a plan comes together.
Yeah, me too. Yeah, it just takes some time. Well, and you could look at it this way. Ethereum is like if you only bought and hold 4 years ago, never did anything with it, it's like the most flatline investment possible, and probably even a loss. You know, some people bought that top however many years ago, and now it's like the price is still way below that. But look what we've done in the meantime. I don't know, if you swing trade, I guess you can get out of it. My thing is sip dividends, stake and stack, and just try to do what you can. I just don't see long term how it just stays here. It's so weird. Look at the chart, just specifically with ETH. I know the whole market kind of moves together, but there are times where it's like, this thing moved by itself, right? It moved up by itself or moved down by itself. I know it's all kind of loosely still connected, but you look at the last few months, it's like a BART up and a sideways and a BART down and then a BART up again. It's just strange. Nobody will ever convince me that that's just an organic movement at all. I know there's a lot of bots trading and people have all their little oscillators going, and I don't know. I just don't know enough about it to read too much into it, but it's a thing, It's a thing. I don't know how to explain it, but I feel like whales be whaling. And at some point when, you got Tom Lee out there beating the drum, and there's other people beating the drum, and all these big, huge institutions are kind of beating the drum, but they're not. Retail's just kind of stuck in a rock and a hard place, I think, with all the uncertainty as to where to put money, because everybody feels like Chicken Little right now, I'm not saying they're wrong, but we've been doing Chicken Little shit for 100 years, end times and that. I will say, though, man, that national debt figure, that shit's going to come home to roost at some point, so maybe there's something to it. People are stacking bullets, gold, and Bitcoin. They just stack the ETH, just do that. Anyway, I'm doing it. All right. And let's see, user Faradin talks about macro, but it's not looking too good. God, it just fell right into that. This is a duder number 5, a relative newcomer. All right. As I generally feel unqualified to talk crypto. Oh, I remember this guy. I actually replied to him because this first line that he says, I generally feel unqualified to talk crypto. My reply is, you'll fit in just fine here. Like we're all just like spitballing. Nobody really knows anything. Allow me to talk some shop with some macro. Currently here in the United States, food service is struggling with sales. Home prices starting to fall. Cinema ticket sales look to end the year down about 5% year over year. Okay. I can understand home prices and food service. I don't know if movie theater tickets are a huge leading indicator. And the reason is streaming services are like, there's people that are releasing movies in theaters, but also on streaming services at the same time. And TVs are like the cheapest. They're the only thing that's counter to inflation over the years. You could buy a 100-inch TV damn near for under $1,000. And so the movie theaters, I like to go to the movies because just it reminds me of days gone by, but that's just it. There's kids being born today that are never going to desire that moment, like the theaters are closing, right? A lot of them are. But anyway, I don't want them to go, but I don't know if cinema tickets are something I want to. Plus, just the amount of movies that are being produced and sold in movie theaters is also down. Look, like let me give you an example. Here. Okay. This camera right here is a Panasonic GH7. Okay. Just the body alone is under $2,000. And you can film cinematic quality stuff with it if you have the right lenses and gear to go with it. Okay. And so movies are becoming cheaper than ever to produce. And they'll go straight to digital because you can make movies cheaper. You can do more with green screens. You don't have to have big Hollywood box office budgets to produce good enough stuff quickly. And so that stuff just goes straight to digital. Like, I don't know how many more like big, huge, over the top James Cameron, type of productions are ever going to be made on that scale anymore. So the industry that sold these to movie theaters is changing. And there's a lot of mom and pop shops that are just doing really good documentaries, and they'll just go straight to digital. They don't even need to go. So my point is, some of the stuff that does make it in the theaters just sucks. And it's not like, I don't know. I think in some ways Hollywood has kind of become something that people don't want to watch anymore. Okay, I'll shut up about it. Off my soapbox. Let's get back to the program here. Faradin goes on, I don't think that anyone is surprised that things like food service and cinema ticket sales are down because we just had a very potent inflationary pulse. And these are highly elastic markets, which exist entirely based off of disposable income. Housing prices falling, however, means that this isn't the whole story. Likewise, the tariff scare earlier this year doesn't tell the full story. Food service may be affected by tariffs, but cinema and housing certainly aren't. You know what? I'm going to just say this too. I think the housing was incredibly overpriced during COVID, for instance. All of that stimmy money that went out, there was something going on also with your big hedge funds buying up all that property. There's a softening to it that probably is warranted because people can't afford a home anyway. I mean, the prices have to come down so people will buy houses again. Sellers are just going to have to relent. But anyway, I don't know enough about that. I would like to get a macro, like real estate person on here to talk about it. My interpretation, Faradin continues, is that these numbers say we are already in a deep recession. Best guess, it probably started in the neighborhood of Q2 of this year. I was listening to a podcast. This is just me on a soapbox again. It was Scott Horton. He's a Libertarian Institute guy, and he was interviewing an economist. And they were basically saying, like, we haven't gone off the cliff yet, but the good old days is when everybody's hurting. And I was like, oh God, that sounds kind of poetic, right? The good old days, is when everybody is struggling because the bad days haven't happened yet, right? That's on the cusp. We're on the cusp of it when we see all these little flashing indicators. But I was like, man, that is crazy. The good old days is when everybody is struggling, but the worst days are never referred to as the good old days, right? Okay. Reminder, I predicted early this year that the Fed's QT from 2022 and 23 would play out as a deflationary spike in Q2 of 2025. I still think this case is mostly right. One of the limits of the rational actor's market assumption is that you have to assume that people always correctly interpret data. If you're conditioned to expect inflation and see a business account with a decreasing account balance, you're not going to intuitively understand that the dollar is deflating and that the true value in the account is mostly unchanged. Your instinctive reaction is to raise prices. When a bunch of people do that, it seems to confirm the assumption of inflation. Unfortunately, that is precisely incorrect reaction. It puts you further away from supply and demand equilibrium and much further into oversupply and under demand. If you can't tell where this is going at the macro level, the forces which expose industries like food service and cinema to downward forces are the same forces which expose crypto to downward pressure. Retail is short of cash, and simply can't buy crypto at high prices. It's fair to guess that as soon as TradFi internalizes the recession, they will go risk averse. No degree of TA psychological warfare from whales can change the fact that no one is interested in buying at high prices. Hence, the price stalls. You know what? That is a good, sober look at the situation we're in. Good on the A word for putting that in the weekly Doots. I think that's a clip right there. I love this. I'm going to read this last paragraph one more time. Let it sink in. If you cannot tell where this is going at the macro level, the forces which expose industries like food service and cinema to downward forces are the same forces which expose crypto to downward pressure. Retail is short of cash and simply can't buy crypto at high prices. It's fair to guess that as soon as TradFi internalizes the recession, they will go risk averse. No degree of TA psychological warfare from whales can change the fact that no one is interested in buying at high prices. Hence, the price stalls. Yeah. That's pretty good. User PA7X1 rounds out the week. They are bullish on the ETH BTC ratio. PA7X1 crosses over the 100 Doots mark, sitting currently at 104. It's too early to tell, but we might be seeing the first innings. 2 years ago on ETH Finance. Okay, and now my end-of-year prediction for Ray, PA7X1 wrote. I think Ray will go for the sleigh in the second half of the coming Bitcoin halving, starting in late 2025 until the next halving. Now, keep that in mind. That was 2 years ago. They were making this prediction. The Bitcoin halvings have acted as cyclical patterns during Bitcoin's life. Initially, was simply a matter of causing a supply shock. Suddenly, on a given day, the amount of Bitcoin that enters the market to be sold is cut in half. Initially, miners need to sell more of it, lowering their margins or tapping into reserves, which causes a dip. Then as the reserves go thin, the new steady state of half the amount of Bitcoin entering the market becomes normal. And given the buying pressure in fiat terms, it tends to cause a price raise. Now a new effect is taking place. The miners are themselves playing the halving cycle. There are a few miners publicly listed so we can see what they are doing. For example, Mara, M-A-R-A. During the last couple of years, 2021 and 22, miners have gone to the equity and debt markets to raise capital very significantly. That is, instead of selling Bitcoin at these prices or going bankrupt because they can't cover their costs at bear market prices, they finance their operation through stock and debt issuance. So they get indebted during bear markets, and they will have to recoup during bull markets. What I think will happen is that when Bitcoin starts to get frothy again due to halving plus the ETF, they will start unloading BTC against the bull market buyers. This will be the self-fulfilling cause of the bear market. At some point, they will have to unload heavily all Bitcoin they have been accumulating during 23 and 24. They will unload heavily in 25 and 26. Unlike Bitcoin, ETH won't have those forced sellers. And although it's unlikely that it can resist the bear market on its own yet, I think it's very possible that it will show a very surprising resilience. This may cause a flight to quality, and ETH becomes the safe haven during the next bear market. Coupled with the force of selling BTC miners, we may have a nice setup for the flippening. Longer term, ETH should have decoupled from the halving cycles. As it becomes a bigger asset in market cap, the effects of Bitcoin's halving dynamics will have less of an impact. Well, let's open up the old ratio chart, shall we? Let's just go and see how we're looking. And we'll just switch to the weekly charts here. And let's see, how do I compress this back? I'm not a chart guy. So this is 2020 back here. All right. So looks like our low was somewhere around April of this year at around 0.018. God, that's hard to believe. and now it's at 0.034. Is this a trend reversal? Are we going to see a sharp rise coming soon? I mean, thinks it's possible, but I don't know. Nobody ever really knows. It's just, God, look how big this cup was, right? Remember this long stretch here, but see, look at the volume. Volume has just dropped off so much in the trade that I don't know what to make of it. We don't have any like golden rocket candle of volume that's really showing much of anything here. As of the last, like, really 2 years, I just feel like the camp is even going back to 20. It looked like the volume on the ratio trade really dropped off in June of 2023, 2.5 years ago. If you just only look at the volume of trade between the two assets, I don't know. I don't know what to read of that. Like, what does that tell you? To me, it just says people that like Bitcoin, and people that like Ethereum. There's some trading back and forth, but I think it's mostly denominated in USD. Well, USD stable coins anyway. There's so much in that arena. Some that didn't get talked about in this weekly Doots that this, I got to find, this post here, the DTCC, a no action letter from the SEC to tokenize certain DTC custodied assets. By leveraging blockchain, DTCC aims to bridge, here it is, TradFi and DeFi, advancing a more resilient and inclusive and efficient global financial system. I read this as tokenizing the international rails of trade, everything. Because I don't know about you, raise your hand if you'd even ever heard of the DTCC, a lot of people send money around using Swift and ACH, but they don't realize that like Swift is actually a group of people. So I started kind of looking into this stuff, and I'm still just as confused. I wanted to get Ram Aliwalia on here or Adam Blumberg to help kind of explain the impact of this, but it seems absolutely monstrous. All these clearing and settlement, I'm just, look at that right there. Yeah. If I point up there, that right there. Institutional trade processing, asset services, clearing, settlement services. These are all the like broker-dealer kind of rails. And if you start moving all that stuff on chain and out of all these data centers, look out. I just don't understand the disconnect between, okay, they're doing stuff on Ethereum, and I know they're testing on other chains as well. But at some point, the levee has to break where Ethereum, the protocol, and ETH, the asset, the adoption of Ethereum, the protocol, starts being reflected in the price of ETH, the asset. And I feel like it's just this incredible coiled spring, Yeah, it's cheap to send transactions. That doesn't mean that Ethereum, the asset, can't be the store of value as well. It's just what it is. It's part of the puzzle. Anyway, that's it for this week, I believe. If you guys should be hopefully watching. Yeah, it looks like we got some people watching on the old Maverick channel. You can follow the EV Mavericks channel on X at EV Mavericks. Let me just go to that screen there, and there you go. EV Mavericks is a great community. Eat the asset. Oh, look at that. Hearing my voice in the background. You can get to the Discord straight off of there as well. I'd love to have you. We have a daily general discussion on Discord, on the EV Mavericks Discord. If you see these lying PFPs out there on X, you could be pretty damn sure they are good follows, and they do a great job just spreading the message of Ethereum. And so there we go. Well, I hope you guys have had a good December so far. We are going to get back to doing more regular content, shooting for once a week. Again, if you can let me know in the comments Do we need to try to keep it on Fridays around this time? Or are you guys good with, the team just getting a podcast out whenever we can? Like I said, I think consistency is key. And I think if we can just get the podcast out anytime that it works for our guests as well as for our team, I'm happy to do them in the evenings once a week. I think it's a good path forward. I don't like doing this thing where we cancel for 2 or 3 weeks in a row. And that's all I got. All right. Well, thanks again to the A-Word for getting our weekly list together, Tricky Troll for getting the Daily Doots together, and, of course, Hanny Abu. On behalf of the EV Mavericks DAO and the Ethereum Daily General Discussion, my name is JT.